What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 30th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to talk about why it's time to start getting prepared. I want to spend some time to talk about what we're looking for in regards to price action that could signal a major expansion, not only in Bitcoin's price, but mainly a reignition of altcoins. But beyond that as well, I want to talk about individual plays that I know are on your guys' radar. Many people start to talk about. I want to give you a candid, honest take. And outside of that as well, share a healthy bit of skepticism of what to look out for in the event that things don't go in the optimistic direction. We got a lot to unpack here in today's video, so if you happen to enjoy, consider dropping a like, and let's go ahead and kick things off. So I want to start here by talking about Bitcoin, because over the last month of September, we saw a near repeat of what we've seen over the last few months throughout the summer. In the month of August, we had an expansion here from the wick lows around $49,000 up to around $65,000. And again, around the roughly same period of time here, the beginning part of the month, similar here at September 6th, setting in another low here. And back in July, we saw the exact same thing here. Getting above those long-term moving averages and getting people really juiced up that it's time to go long and get excited about the market. The market has been flagging, and we're ready for a breakout. That's at least the narrative we've heard time and time again. A lot of people now, after seeing that happen a couple times, are wondering, hey, do we have the steam to really take off here? Some people have already started building positions, and if you've been doing it in the altcoin sector, congrats to you. You've already been making some good returns. But what I really care about here is whether or not Bitcoin is going to be able to set a foundation here on these moving averages. More specifically, I'm looking for Bitcoin to be able to hold on the green and yellow lines here, the 21-day pocket or 21-day moving averages. Now, the reason this is important here is because not only will it showcase that buyers are coming in here at a slight discount and able to provide support in that range, but it's going to show us here that the short-term moving averages are no longer acting as resistance, they're acting as support. And it's also going to tell us likely that the long-term moving averages can yet again serve as support, if anything, or that we may not be spending much time around this price range, meaning that bulls have essentially flipped the trend. We have started to get to a position where essentially bulls can lead, drive prices higher. Sellers have gotten out all the distribution from Mt. Gox, the German government, the US government. A lot of big sell-side events have kind of passed, and that the ETF inflows perhaps are starting to pick up, right? So price action is where I'm going to be leading into most of all, right? ETF inflows, that's definitely something that is going to have to come in here probably to provide that bid side support. But above all, watch what price action is showing you here. If we can really get a support on that 21-day and break out above the $69,000 range and really start having a nice solid weekly close at a slightly higher price from where we're at now, that's going to get me really excited, because that's going to give altcoins, right, or other coins. This is the index that we track for the broader altcoin space. It excludes the top 10 largest cryptocurrencies. That's going to give us the foundation for this to really start expanding, to get past its long-term moving averages like the 200-day, which still, so far, we are in the 200-day pocket. We haven't really gotten out of that yet. And it's important to understand, and a lot of people feel like, oh, but Nick, aren't we going to miss everything if we don't get in now? And while I'll be honest with you guys that there's always a chance this could be, maybe we get that breakout and it's a short-term deviation, a sort of trap, and things start to go down. Right, we're keeping open to that. But the main thing I'm looking for here is that so long as that 21-day is rising and price is bouncing off of it every single time, price comes to interact with those moving averages, that is really my cue to be optimistic on altcoins and to be willing to take risk, especially when we have had such a solid correction. I want to really put it in perspective, guys, because I know a lot of people feel, oh, if you didn't get the lows here at the $150 billion market cap range, you missed out. Guys, altcoins right now are still 37 to 38% cheaper than where they were back during March, right? We sold around this range back up here, right? And it's, again, listening to that 21-day moving average. The 21-day was starting to stall. It wasn't trending higher. Price wasn't finding the bid side support that it previously was during this window of time. So if we just follow that game strategy here, even if we were to just come back up here towards the prior highs, or maybe even this level here at 305 billion, there will be plenty of opportunities to make some good short-term trades, let alone if it goes to even higher levels and actually revisits the prior all-time high of other coin market cap up here at the upper $400 billion range, right? So that's like very conservative asks versus what I bet many people are calling for an altcoin cycle. Many people believe altcoin dominance and altcoin market cap are going to go to new highs and they're going to go to $1 trillion and these kind of far pie in the sky figures. I do not think that is going to happen, if I'm giving you my honest take, but there's definitely a chance for a short-term rebound here, and there are going to be lots of meme coins. There's going to be a solid range of mid-cap plays and the DePIN or Bitcoin infrastructure narrative plays. There are going to be interesting layer 1 infrastructure plays. But above all here, what I like is that dominance is starting to pick up here. And in a big way, we're seeing consistent higher lows and higher highs. We're pressed up against that 200-day, which again was resistance back here and prior support in the past. So just like back here, and back I think in July of 2023, it is imperative for us to get past that 200-day, because if we do, there's a good chance that this continues expanding. There will be some pullbacks along the way, but what we'll be doing is we'll be having breakouts in which allow us for when we do have pullbacks to turn those long-term moving averages, the blue and purple lines here, those are the 200-day and 100-day pockets, to be able to act as support, as entry ranges when the 21-day fails us. So this is, again, the early cusp here, right? We don't want to try to catch falling knives, because again, if this faces resistance at the 200-day, we just go long blindly, then we could be buying into empty bags that roll over again and don't actually have the momentum to accelerate, and they again just dip lower and lower here, right? So again, just keep that in mind here at the end of the day, why we follow this principle. I would look for a pullback here over the next couple of days, perhaps down to that 21-day moving average. And from there, if we find support, especially at previous resistance here in the short term, that could be a foundation where, we get up here to the 200-day and we can really start to squeeze higher again. The bulls can finally start to take charge. I want to see it show up in the price action. I like the initial rally here, but I want to see momentum come in. That's how I know I can come in and make the kind of trades that I made back in Q1, where I made phenomenal returns in the meme coin sector, and DePIN, you name it, all the major narratives. Next, I want to talk about some of the large caps here, right? Because while, as I've echoed before here on the channel, guys, I really don't think you're going to be making phenomenal returns buying Ethereum or Solana. At the end of the day, I don't want to negate them as potential trade setups for the short term. They can have their moments where they outpace the market and do quite well. One of the things I just wanted to emphasize here is that Ethereum is down 56% from top to bottom here since back in December of 2021. I want to emphasize that's coming up here on nearly 3 years of pullback for Ethereum, where it's not been favorable to own Ethereum. But now we are finally, after a brutal downtrend after the launch of the ETF, we are finally finding support after nearly a week's worth of price action on that 21-day moving average. I like to see that. I got to be honest. You guys know we've been kind of keeping cautious. We've been waiting for signs of an actual trend reversal. We've been very vehement about that and that things could get worse, right? But at the end of the day, I'm gonna let you guys know when I see something that looks bullish. And this to me looks nice. Volume profile, not too impressive, but at the end of the day, it might show that we have gotten all of the hands out and that ETF inflows could provide a buoy of support here at current prices. Not to mention, this is again in dollar terms, just to kind of put it in perspective, right? We're at a really solid discount here versus where we were back at the prior relative highs of this run up from back in March, from $4,000 down here to $2,600. And we had the 200-week moving average retest 3 times, which could very well mean that this is a nice base of support like back here in October 2023. Not to mention, we haven't gotten to the highs of November 2021. So it's definitely a good sign to see that there's at least some room for acceleration. For a 5 or 10x, no. But for like, a nice 30-50% run up, maybe on the tail end of optimism, going to 5,000 and almost doubling, possibly. But again, that's not where the life-changing returns are going to be made for the crypto space, which is why I'm not really trading it too much. But again, if you're keeping your expectations more moderate, at the end of the day, that can also be a great trade setup. Still, getting a doubling on your capital that you put in is still great. And I think we need to be realistic about what we can really get from returns in the crypto space nowadays, considering the markets of scale is not as beneficial. Solana as well, another good example here, finally, again, creeping back up above that 200-day, but not really in a way that's got me excited yet. I mean, previously here, we used to bounce off the 200-day and just rally. It's a very small move here, which makes me feel that there's a lot of distribution going on, considering that over the last couple of days, there's been a lot of inflows versus the past few months. This, again, makes me wary of touching Solana, in my personal opinion. There's a lot of institutional capital, a lot of insider capital. The FTX claims distribution going on. I understand some people would argue at the end of the day that it's actually good for Solana. I'm talking about the large amount that institutions have been acquiring and are obviously incentivized to distribute and sell, considering relatively weak fundamentals in Solana, not to mention that the price has accelerated so much over the past couple months. A lot of free money to be made. Wanted to talk though a little bit though about some of our plays we're watching. Again, Fetch has a nice pullback here to the 21 day so far, finding bid side support there. That's good to see. It's good to see the buyers are yet again coming on this moving average. The more this holds here, this makes me optimistic that this will continue to be a market leader. Once it gets above that 200 day, I think that that's where things get really exciting. We can see that that's what happened here, for example. Bear in mind again, if we can't get above that 21 day, the 200 day in the meantime, we could be in for a very nice pullback, maybe not as much as back here, but at least down maybe to the 100 day pocket. Again, at the end of the day, once you break above that long-term moving average, the 21 day is your friend and you just want to follow the trend there. Same back here, support on the 200 day, breakthrough on the 100 day, right? Signs of momentum here, that you're moving through the moving averages. So for me personally, I'm watching here to see how that holds. Not following in right now after a pretty nice acceleration, but waiting to see if price showcases that it's really still got that strength. Render, another great, interesting fundamental play here. Nice higher lows, slightly higher highs here. Starting to press up against that 200 day pocket, which is quite wide at the moment. But again, right now, just coiling in there. We're quite distant from the 21 day. So again, similar to Fetch and the broader altcoin space, I have no doubt, guys, that while we're doing this video now, there might be a couple days where things pull back. That's okay. That's to be expected. But again, it's a matter of that 21 day holding. If the 21 day is trending higher and it's starting to provide support, that gives the range for price to move higher and bounce. So this is, again, another play that's still from its prior highs, mind you, is down around 50%. So there is easily room here to make a double on this play if we go back to the prior highs, right? Even if it's a double top, right? If it's a fake out, that's when everyone starts getting euphoric and goes into crypto and altcoins. That can still be a great return from this point on. Like, you got to take those wins when you can get them. And that's against Bitcoin. So considering, again, we're talking a Bitcoin comparative. So if you're talking about in dollar terms, it could very well be that Bitcoin is continuing to accelerate, meaning we're getting 130% return, 150% return from our entry. So that's why, again, I emphasize that it's you're not too late if this really starts to bring about another trend like we saw back here during December of 2023. Taking again a look at ordinals against Bitcoin, this one is still down massively from the highs. I don't expect it to get back up to the highs. In my opinion, it's at 68.8% down. But again, even if you were to just get up to one of these prior ranges of resistance in the past, again, 78, 80% return against Bitcoin, probably in a very short period of time. This is a momentum trade. So keep an eye on this. Watch the volume profile. I think that's another one just to keep on your radar if you can get access to it from your exchanges. I want to go ahead and talk a little bit about the topic that obviously is on everyone's mind as one of the narratives. It's always one of the strongest ones in each cycle, and it keeps rearing its head around the corner every single time people get optimistic, and that is alternative L1s, or you probably have heard it in the fashion of a Ethereum killer or Solana killer. Basically, what chain is going to try to eat alive the market system, the market ecosystem of crypto that is currently allocated to one of the major chains, and also which L1 protocol is going to be able to take in all of the potential new users coming into the space and really be the new darling of the cycle. Well, I know a lot of people have been talking about Sui and Sei. I mean, just absolutely incredibly ironic and totally doesn't feel well planned at all that two of the big VC-backed chains have very similar names, and that they are, of course, some of the short-term top performers, and everyone's talking about them being, Solana or ETH killers, whatever. Again, at the end of the day, guys, I know some people might say that, Nick, you got it wrong, this or that. Guys, I've been in this space long enough. I've seen so many protocols, so many tokens. Let me just tell you, at the end of the day, I lean into price action because I've heard so many people say this is the reason this protocol is great. It has this technology. It has this much better user experience and scalability. At the end of the day, I don't really care about that because my question is, if I'm going to allocate capital, am I going to make money? Right? That's my biggest focus point here. Right? I wish these protocols and every other crypto protocol that has good intentions all the best. But at the end of the day, I see a lot of people raging about these protocols saying they're the next big thing. And to be honest, Sui right now has already from its lows had about a 200% rally. And it looks like it's probably on its way to repeat what it did back between October 2023 and January 2024. The question I have here is, can it really get past this line of resistance since it's listing back on Binance in May of 2023? If it can do that, I might be interested in building some positions. But I'm also going to be keeping a pretty tight stop on it. Probably the 21-day moving average being that base foundation. Of course, you don't want to have it exactly on the 21-day. You don't want to get stop hunted. But keeping that as kind of a level. If it's not holding well on that 21-day consistently, then probably closing positions. And beyond that, I want to see a break through this line of resistance. I want to see a solid breakout here that shows me that this has really got the steam to become a multi-$10 billion protocol similar to Solana. It's already sitting right now at a market capitalization of around $4.7 billion. And for me, I don't like the fact that since March, okay, now I want you guys to follow me here. This is like criminal. This is what you got to get used to. It's the new crypto space. It used to not be like this. The market cap has doubled, yet it's at the same price range. Well, why is that? Well, it's because of token unlocks. And you gotta wonder why everyone is talking about SUI at the end of the day. It may very well be that there are lots of insiders who have lots of tokens that are part of these token unlock programs. And not to mention, there's still 73% unlocked that is going to be leaking fast and fast and fast over the next few years into May of 2026. Not to mention afterwards the continued dilution all the way into 2069. Okay, well, I mean, look, I'm sorry to be really like cynical and a bit snarky, guys, but you're not going to get the next Ethereum with these token economics. It's already got a fully diluted market cap of $18 billion. And you've got a lot of early contributors, Series B, Series A, the community access program, stake subsidies, community reserves, the locked contract, whatever. Mistin Labs Treasury, I'm assuming that's one of the developer ecosystems for SUI. You got all these tokens that are going to be coming out. And I don't want you guys to get caught in these traps thinking that it's a guaranteed next Solana. You can have a position if you want, but just keep in mind that there are thousands of protocols like this that are really, at the end of the day, having token economic schemes that are not beneficial to the holders and are just VC projects that by the next cycle are not going to be around. For me personally, I like to look for projects that are having strong price action, but beyond that as well, still give the multiple potential to really do well, that are not heavily diluted in value by the excess amount of token supply and the high fully diluted valuation of the token itself. Right? Again, I like seeing this kind of price action. I'm not opposed to making a short-term trade, and I like seeing that SAY is above its 200-day here, SUI as well above it, and looking for a retest on that 21-day to break above that line of resistance. But I keep in mind that these protocols are already trading in the mid-cap range here, and in many cases, at trading ridiculous fully diluted valuations. For me, not to mention, this feels a lot like Aptos, which, bear in mind, has been sitting here at $4 billion, fully diluted at $9 billion, and it's just been basically trending sideways since November of 2022. If you bought it on the tail end, on the lows, that's great, and sold it at the highs, that's awesome. But if you guys are really looking for that 10 or 20x, I don't think you're going to find it here, and it's going to be very difficult to figure out which one of these is going to be that 10 or 20x. What I think is much more of a smarter move, in my opinion, this is why, again, on this channel, we focus on a set of layer 1 protocols that are not these heavily VC-backed coins, that are much more grassroots initiative, longer term fundamentals, smarter token economics. I like to focus on a lot of the layer 1 protocols, like the ones we talked about on our channel, like our partner Aleph Zero. Now, there's a reason we partner with Aleph Zero, because at the end of the day, Aleph Zero is not just doing the same thing that Solana is doing, but slightly better, or every other L1 or L2, which is that, we can do more transactions, or we can do faster confirmations, right? That's all great. But if you can't build exciting new applications on your chain, you are going to be no more valuable in the next few months than Solana or any other network for that matter. Not to mention here today, there's nothing more exciting you can do on something that is more easy to use and has higher throughput. What you need is groundbreaking features that no other protocol has. And one of those that Aleph Zero has, its pinnacle focus, is not just EVM compatibility and high scalability and COSM-WASM interoperability as well. But beyond all of that, they have privacy built in to the protocol. It is a fundamentally privacy-preserving protocol using zero-knowledge proofs. And by using zero-knowledge technology, this is going to allow Zero to do some phenomenal things. In the past month of September, they just released a progress update. There's a ton of things that they recently did. They finally established their token metrics through the governance process, which is slowly but steadily rolling out, which is going to set a cap on the supply, the year one inflation rate, and it's going to finally give an actual understanding of the token metrics for the protocol. But along with that as well, they launched their EVM network. They have major collaborations with sports and entertainment platforms. And outside of that as well, the biggest thing above all that I want you guys to understand is this launch of privacy and what this is going to mean for enterprise adoption. If we're talking about getting DeFi to a major institutional stage, if we're talking about getting enterprises into the network, we are going to need institutional grade privacy on these networks. We are going to need technology in the crypto space to be able to be privacy preserving. And for me, what I like is that Zero right now has been finally, after a pretty solid correction here, similar to back here in April of 2022, had an 80% pullback and is now finally forming a base here. I like the sight of this. I like seeing that we're above the 21-day moving average. I like that we're pressing against the 100-day. Again, guys, this is my honest price perspective here. I like that finally this is finally showing signs that it could be trending higher. But beyond all that as well, similar to Radix and some of the other names we talk about here, this one is sitting at a $109 million market cap, fully diluted $137 million, and has a really solid team of creators, entrepreneurs, academics, a whole range of people who have been working at solid enterprise companies who know how these businesses think and are building a protocol that is going to allow for significant enterprise adoption. And also all of those major narratives that are tied to DeFi at the end of the day, real world assets, institutional grade DeFi, really getting traditional systems integrated into the crypto ecosystem in Web3. I think the only way you're going to do that is by having a solid enterprise grade blockchain. And this is what I think Zero is building, in my honest opinion. So I definitely recommend you guys just check them out. Check the link down below in the description. Do your own due diligence. I'm not here to shill it or tell you guys you have to go and buy Zero, but learn about it, explore the ecosystem, see the projects that are building. I think you guys will be really pleasantly surprised. And I think that there's going to be a lot of exciting developments considering the range of telecom partnerships with Vodafone, as well as T-Mobile and a whole range of other names that are already exploring working in the Zero ecosystem. So that's it mainly around the crypto space, guys. Keep cautious. Don't expose yourself into just one play in the market. Keep an eye out for these kind of typical expansion ranges that can lead to distribution weakness at the 21-day being kind of your guide to see if whether or not this cycle is really starting to play out, if these plays have the momentum to continue carrying forward. That's a very important principle to keep in mind. And along with that as well, we've got to talk a little bit about the macro, because while altcoins feel like they're in the initial stages of heating up, Bitcoin definitely looking more optimistic than where it was, say, back in the earliest portion of September. I want to go ahead and emphasize that at the end of the day, we have got to keep an eye on the macro. Now, so far, over the past couple of weeks, really over the last month, equities have been really stealing the stage. Stocks have been doing phenomenally well over the past couple of weeks. And we can see here in the S&P 500, this has been a part of a broader trend reversal that's been happening really since the launch of ChatGPT and the rise of AI since back in October 2022. They really formulated the bottom here in the 200-week, taking us from around 3,600 points on the S&P 500 to 5,700 at the time of recording. It's a major expansion here in a relatively short period of time. But the big thing that I want to bring to your attention is that we are still set on course here to go up here to 5,900 and test that 95 year-long line of resistance, the channel that we have been in. And I really want to emphasize how significant this is, guys, because it's very easy. While some people might, have an understanding of these things, they lose track of it. There's a million data points you're taking in every single day from different different people, different sources, and different charts that you're watching, because it is one of the most important charts you can keep on your radar. It is by far one of the most important. If this rejects, then that could be very bad, not only for equities, but it could be very bad for crypto markets. If we break through this, that is also an incredibly significant sign of risk-on mentality, of potential monetary devaluation where you want to be exposed to asset prices, and that essentially assets will be expanding for the next few years to come, right? that we may be entering in a new paradigm with AI or whatever the narrative might be. At the end of the day, we focus on price action. This key level here, which will probably be tested sometime in October or November, is going to be one of the most critical, decisive moments for the next few years for the trend in asset prices. We better be paying attention to it. When I take a look at the VIX here, we had really this massive volatility event. And while I would usually say history tells us that once this happens, we're not going to see something like that for some time, keep an eye here and watch whether or not we keep holding on this 200-day on the VIX. We want to see this collapse below it. We want to get below 1450 and be in this low volatility one, because that's where a lot of really easy, great money can be made, both in stocks and in crypto. So that's it for today's video, guys. We rambled on a good amount here, covered a lot of good topics. If you enjoyed this video, consider dropping a like. It's a great way to support the channel, as always, guys. But until the next video, I'll see you guys in the next one. Take care, everyone.